Welcome back. A flattish opening is what we are bracing ourselves for because the gift nifty is suggesting that. But let's talk about stocks. Dipan Mehta, Director Elixir Equities, joins us on the show. Hi Dipan, morning. Good to see you in. Well, tell us about Honasa. What do you think about those numbers? Growth was good. Profitability appears to be improving. But at these valuations, what would you do? $350.
Yeah, good afternoon, Nigel, and thank you for having me on your show. Yes, I think the management certainly has surprised the street, and that's very good news post-listing that a company should report such strong numbers. But let's look at the sustainability. I think 2-3 more quarters of similar type of growth rates, which I mean 30-40%. And it would be in that zone, which I would say is reasonable and with a bit of a margin of safety, assuming the price remains at these levels. So it still appears to be expensive, on a trailing 12-month basis, or if you were to analyze these quarters' numbers. But it's more like work in progress, and let's see how the follow-through comes through for the next few quarters or so.
Okay, that's on Honasa, so that's work in progress. Dipan, hi, good morning. I wanted your thoughts on the Tata Tech IPO. Now it's already oversubscribed quite a bit, right? 6.5 times on day one. So it looks like allotment is also going to be very limited. But post-listing, once it's expected to list at a premium, despite that, would you advise investors to buy?
Yeah, good morning, Sonia. I think let's look at what the listing price will be. And, 30-40%, 60 up to 50% higher than the price it is, which the IPO is. I would still say that on a long-term basis, that may still give good returns per se. But, such companies are best bought 3, 6 months, 12 months down the line, when we have seen 2-3 quarters and all the initial euphoria around listing has died down. No doubt it's a great company, and it outperformed its peer group when actually the going was pretty tough for the IT industry. And if you look at the entire spectrum of all the verticals in the IT sector globally, auto is one of the strongest in terms of tech spend. So a lot of positives for Tata Technologies. But I just like to wait and watch and see what the listing price is, and see how the quarterly numbers also come through for December and so on, and then make a more informed guess.
Dipan, just one quick word on the Murugappa Group names, which all surged. The news, of course, was on CG Power. They're venturing into this OSAT business, which is late stage, I think PCB board testings for semiconductors. But look at CG Power, which was locked up, Tube Investments, Carborundum, just flew off the handle. Any thoughts here?
No, I think these are quiet performers, do profile South-based company, but great value creators. And they tend to focus on specific verticals, and they become market leaders over there. On the whole, I think all these steps, the way Tube Investments acquired CG Power and how they turned it around, is really one of the best turnaround stories in India. And how much value they have created in CG Power also. It was a penny stock, and it has grown multi-fold and one of the best multi-bagger stocks as well. So as a group, I think they do phenomenally well, and we like their capital allocation policies as well. They never got into any debt trap or any corporate governance issues as well. So I think from time to time, investors could consider these stocks if they're available at attractive valuations. But as of now, I think whether it's CG Power or Tube Investments or Corborundum Universal, they're all trading at rich P multiples.
Okay. Dipan, there's so much talk about what's happening with Titan, right? 3 lakh crore market cap. If you had bought it 20 years ago, you would have, spent 1 lakh 20 years ago. Today, you'd be sitting at 6 crores, etc. But hindsight is always 20/20. What do you think the next Titan will be?
Oh, that's a tough one. So now next Titan. See, the thing about multi-bagger stocks, you don't know when you buy them whether they're going to be multi-baggers or not. And Titan really surprised the street from time to time. They were in the right place at the right time. So from that point of view, I don't know which is going to be the next multi-bagger stock. But, we have all these specialty retail companies, like this Manyavar, then Campus Activewear, and Metro Shoes. These are companies, which are, I would say, have a greater potential than large format retail companies. And the balance sheets are great. They have a fantastic runway for growth in terms of growing into tier 2, tier 3 cities. And at the same time, very aggressive managements, and they're perfectly riding the premiumization trend as well. So we are looking at these companies, they're expensive, and I would say that last quarter numbers also a bit disappointing because of tepid demand. But these are companies in the consumption space, which could really grow and grow manifold from these levels and provide a good secular growth for an investor. But you need to buy them when there's somewhat a margin of safety and when there's a decent correction in the stocks, because optically they appear to be quite expensive.
Okay, well, Dipan, we'll leave it there. Thank you very much. Great chat as always. Appreciate your time here on CNBC TV 18. Thanks indeed.